Join Lee Bellinger today on the Bellinger Report. Lee is the publisher of Off Grid Confidential, one of the last information financial newsletters to be delivered 100% through the mail and completely independent of the internet and big tech scolds. Lee has been publishing continuously since 1988 and is your guide to off-grid living.
Hi, this is Lee Bellinger with the Bellinger Report, and I have with me today America's foremost expert on the Internal Revenue Service. This is a guy who very early on memorized the entire tax code, which I find to be crazy. But Dan and I are friends of long acquaintance, and Dan Pilla and Pilla Talks Taxes. And Dan is America's foremost expert. I believe that the Associated Press said that you know more about the IRS than the IRS commissioner. And Dan's specialty is in helping small businesses deal with the IRS. He understands all the rules and regulations, and he knows where all the protections are buried in the tax code. And buried is the right word for it, because the tax code is actually packed with protections, but they never tell us about it. And neither do your bookkeepers or CPAs or accountants. They don't talk about it, but Dan knows all about it. So if you have a problem with the IRS, Dan knows how to get things done. If you're in trouble, if you haven't filed your taxes in a long period of time, and a lot of other issues. So Dan, let's talk about the upgraded, the meaner and not so leaner Internal Revenue Service. These guys, they never quit with us, do they, Dan? Is it still an $80 billion increase in the IRS budget and so forth?
Yeah, that's exactly right, Lee. You're talking about this bill that's working its way through the House right now. But let me back up a step here. Now, I don't want your viewers, Lee, to think that I am certifiably crazy. I have not memorized the entire Internal Revenue Code. I appreciate the gesture of confidence, Lee, but no, I have not memorized the entire Internal Revenue Code. That would be pure.
You wouldn't have had time to get married, or you wouldn't have had time for decorate your office.
Well, even worse than that, even assuming you had time to memorize it, the problem is the doggone thing changes all the time, Lee. We've had more than 5,600 changes to the Internal Revenue Code just since 2001 alone. And that doesn't even include everything that's happened in the last 18 months with all of these massive tax bills that have come out as a result of the COVID situation that we're in the midst of here. It's not over with by any stretch. We've got a bill moving through the House right now that's another 800 or 900 pages in length that's going to stir the pot yet again, Lee. And so it's very difficult to keep up with this stuff, no question about that. And one of the key elements of this bill that you touched on a minute ago is the fact that the Congress wants to add a total of $80 billion to the IRS's operating budget spread out over the next 10 years. Now, just to put this in perspective, Lee, the IRS's budget right now for 2022 is going to be about $13 billion, a little north of $13 billion, maybe $13.5 billion. So $8 billion just about doubles that. Then that $8 billion is going to be an increase over the next 9 years after this one. So for 10 years in a row. So that'll push the IRS's budget to north of $20 billion. Lee, to put this in perspective, they're already the best funded police force in the world and the largest police force in the world. And this is going to just about double the size of their budget. And of course, what they want to do with that money, naturally, comes as no surprise to people, is focus on enforcement, and in particular, audits and collection. And on the audit side of the ledger, Lee, particularly targeted against small businesses.
Isn't there something out there I read that they specifically regard anybody that owns a small business as a tax cheater, and it's actually in the IRS? It's either in the IRS operational manuals or it's in the procedural manuals. Yes, is that somebody dug that out and found it?
Yeah, that's exactly right, Lee. It's in their enforcement philosophy literature. So we don't see it written in the law or the regulations, but it drives their thinking. And what we're dealing with right now is the philosophy that, well, let's just step back and let's talk about one of the things that drives the IRS's thinking from an overarching level, and that is the tax gap. The tax gap is defined as the difference between the money that's owed in taxes and the money that's paid. Now, understand, Lee, that the tax gap does not involve the IRS's accounts receivable ledger. All right. So if somebody is audited and they are found to owe $20,000, or they just file their tax return and the return shows that they owe $20,000 and they don't pay the money, That liability becomes assessed. It's on the books. It's collectible. That's not part of the tax gap. That's an accounts receivable. The IRS knows how much is owed. They know who owes it. They know for what year it's owed. Okay, that's an accounts receivable. It's no different than a business getting a bill in the mail from their advertising agency for X $1,000 for advertising services. You know what the bill is. You know what it's for. You know why you got it. All right, that's an accounts receivable. It's money that's owed. The tax gap is the difference between the money that actually should be paid in taxes versus the amount that is paid in taxes. So let me give you an example of what would be included in the tax gap. A person files their tax return showing that they have $200,000 worth of income. And so they calculate their tax based on $200,000 worth of income. And let's say the tax liability is 30 grand. But in reality, that individual hid $50,000 worth of income from the IRS. So they underreported their income by 50 grand. So their tax liability should be 40,000 instead of 30. The IRS doesn't know that. All right. They wouldn't know that unless there's an audit and unless the audit reveals the fact that they underreported their income by 50 grand. So that's the tax gap. The tax gap is estimated, Lee, because the IRS is just guessing at the amount that's owed and not paid. And those guesses are based on a number of data that we can talk about if you care to get in the woods here a little bit on this. But the bottom line is this, Lee. The tax gap drives the IRS crazy because this is the amount of money in taxes that should be paid to the government, but is not. Now, the IRS believes that 50% of that tax gap, exactly half of it, is attributable to small businesses hiding their income. All right, so the IRS is completely convinced that small businesses are cheating across the board on their tax returns, not so much by overstating deductions, but rather by hiding income. And that's what's driving this current enforcement mania that the IRS has wrapped its head around right now. And that's where they're headed with this increase of $8 billion or $80 billion in their budget over the next 10 years. It's this idea that businesses are cheating by hiding their income, and that's what they're going after.
It does appear that at the current budget of $13.6 billion, that the IRS operational structure seems to have collapsed. Is that true?
Well, there is some truth to that, no question about that. We've been seeing serious problems in the IRS's operational structure, and not just attributable to COVID either. We've been talking about the broken IRS. I've been talking about the broken IRS in my writings here for the last 5 or 6 years. And the reason for that, Lee, is we've seen really since about 2010, since the Obama administration gave us Obamacare and made the IRS responsible for enforcing the penalty provisions of Obamacare, we have seen a significant amount of mission creep in the Internal Revenue Service. So the IRS has been made to be responsible to enforce all these various welfare programs that the federal government passes and runs through the auspices or runs under the auspices of the Internal Revenue Code. I'll give you the best example, and the most recent example of this is the child tax credit. You probably realize that as part of the American Recovery Act plan that was passed into law in March was a significant increase in the child tax credit, and the child tax credit was made a prepaid credit, Lee. So starting in July of this year, the IRS has actually been mailing a check to every American family that qualifies for the child tax credit. That's a welfare program administered by the Internal Revenue Service. It's just a massive program. And we saw exactly the same thing, Lee, with the economic recovery stimulus payments that were passed out. There were 2 of those payments that were passed out in 2020, as I'm sure you recall. I think the first one was $1,600 and then $1,200. I forget what the numbers were. Doesn't make any difference, but everybody was getting these checks, Lee. That's a welfare payment that was paid to the American public and administered by the Internal Revenue Service. So it's outside of the direct realm of the IRS's initial responsibility, which is to assess and collect income taxes and all the various federal taxes.
Let me jump back to this IRS upgrade. What does this mean? How do small businesses begin to protect themselves from this far more aggressive approach to collecting taxes? What should they expect?
Well, they should expect a number of things. First of all, the IRS is going to systematically attack the income that's reported on a person's tax return. And so you need to understand a couple of things about that. First and foremost, Lee, you need to understand proper record keeping techniques in order to establish that the income reported on your return is accurate. Now you say, well, I got an accountant. We don't have to worry about that. Accountants don't keep your records. Accountants use the records you have to make your tax return and to make the various reports that you as a small business owner generate from time to time, whether it's a profit and loss statement or a balance sheet or whatever it is. Those reports are based on your primary source documents. So you as the small business have the principal responsibility to maintain proper primary source documents, bank statements and credit card statements and all the records that would establish what your accurate income stream is. So if the IRS attacks your income, you can prove that your income is correct. So that's the first thing. The second thing is you need to understand what the burden of proof is when we're talking about income. If the IRS alleges that you had income, that you earned income that was not reported on your tax return, they have the burden to establish, at least at a foundational level, that you in fact received money that was not reported as income. So for example, let's get back to my earlier example of the guy who underreported his income by $50,000. So the IRS says, look, at your tax return says that you earned $200,000, but we think you earned $250,000. They have to have a foundation of evidence to support that, Lee. And that could be bank statements, or it could be spending activities, or it could be a specific statement from a client that says they paid, Dr. So-and-so 50 grand or professional so-and-so 50 grand that didn't show up on the tax return. These types of things are ways that the IRS has a responsibility to prove that. If they can't establish that initial burden of proof, Lee, then you as the individual do not have to prove a negative. So you got to understand the burden of proof when it comes to income. You got to understand also the burden of proof when it comes to deductions. The IRS attacks small businesses in a number of different ways when it comes to deductions. And they have a pattern. And I've noticed this over the last 40 plus years that I've been litigating on behalf of small businesses with the Internal Revenue Service and the United States Tax Court all over the country. There's always about 12 or 15 different ways that the IRS attacks a small business. And in my book, Dan Pilla's Small Business Tax Guide, I lay out exactly how the IRS attacks a small business in these areas and precisely what you as a small business person need to know to fend off that attack. So I have it all in writing for you, and it's a very simple, easy to follow formula to defend yourself.
This is the Business Tax Guide?
Yes, sir. It's Dan Pilla's Small Business Tax Guide.
Let's talk about that for a minute. Why don't you tell us a little bit more about your your business tax guide, your small business tax guide? Because I just want to mention something to the subscriber, to the people who are listening to this broadcast. Small businesses are under assault on many levels. COVID took out half the small businesses in this country. And basically what the law enforcement, what the powers that be want to see happen is that they want to put us under the jackboot of these corporate, left-wing, conglomerate, monopolistic enterprises that got there with taxpayers' support to get their monopoly and now are exploiting and attacking the pro-liberty Americans and the small businesses that support them. And so they've already used COVID as an excuse to take out half the small businesses in this country. And this $80 billion upgrade over 10 years on IRS is going to also have a huge impact on small businesses. And so I just wanted to point that out, and why Dan Pilla's Small Business Tax Guide is so important. It's $50. What a great deal. And I'm going to actually do a nice story on it in our newsletter this next month. Anyway, Dan, go ahead. I just wanted to put all this in context. There's a reason why Dan did this business tax guide, small business tax guide, because it's something that's desperately needed in the United States right now. So
yeah, there's no question about it, Lee, and it's never been more timely. As I said, I've been representing small businesses for over 40 years in the tax court all over the country. And this book is the culmination of 40 years worth of experience in litigating with the IRS. And I have brought all my litigation experience to bear in these various areas, 12, 15, 16 areas where small businesses are routinely attacked by the IRS. And I've brought all my experience in defending small businesses to bear on answering the question, how do you stay out of trouble in the first place? And this is the focus of the Small Business Tax Guide, how to stay out of trouble as a small business owner. Now, Lee, you mentioned that the federal government wants to wipe out small businesses. That might sound a little crazy to some people that are listening to us right now. But let me tell you something. That is an absolute true statement. And I'll tell you why the Internal Revenue Service in particular, as driven by the talking heads and the thought processes inside the Treasury Department. Small businesses do not have systematic income information reporting systems in place so that the IRS can know every nickel they earn. When you're an employee for the ABC company, you get a paycheck from the ABC company. The amount of your paycheck is reported to the IRS every year. As part of your employment responsibilities, you have to submit withholding information to your employer. That means they take money out of your paycheck for your federal income taxes, your Social Security, your Medicaid, and your state income taxes if you live in a state that has income taxes. All right. So the fact of the matter is, Lee, and most people don't realize this, about 65 cents of every dollar collected by the IRS in taxes every single year is not collected by the IRS at all. It's collected by businesses through wage withholding on their employees. So not only do those businesses collect taxes for the government, they collect information for the government. And that information is reported to the Internal Revenue Service in the form of Forms W-2. Lee, get this now. There are about 3.5 billion, that's with a B, billion information returns filed with the IRS every single year. These are primarily W-2s, but 1099s as well. The 1099s report such things as interest and royalties and rents and so on that you might earn through this or that channel. But the vast majority of small businesses do not have that information reporting that goes to the IRS, and they absolutely do not have the wage withholding. The IRS does not want small business owners operating in the United States of America for those two reasons. No wage withholding. In other words, the IRS actually has to collect the tax from small business people as opposed to having an employer do it. And number two, no information reporting. The IRS hates it. They hate every bit of it, and they're focusing on ways to crush small businesses. And there just is simply no doubt about that.
That's right. That's right. And then, the other thing is the IRS, one of their big scams is they send out collection notices to millions of people. And then what you've established that they have a well over 50% error rate. It's actually higher.
That's exactly right. That's in their computer notices. The IRS will mail out about 100 million letters and notices every year. And that's not necessarily notices going to 100 million taxpayers, Lee, because, some people are going to get 3 and 4 and 5 notices a year, no question about that. And they aren't all collection notices, but there are millions of collection notices. In fact, tens of millions of collection notices that go out every year. And certain of these notices, in fact, there's a family of notices that are really referred to as adjustment notices, not collection notices. If you file your tax return with the IRS that says you owe them $5,000 and you don't pay the money, you're going to get a collection notice. All right. You owe them the $5,000. You filed the return. You didn't have the money. You didn't pay it. Now they're in your face. Now they want the money. That's a collection notice. But a correction notice is something different. And I happen to have one right in front of me here for a client that we received just the other day. And it says, "Dear taxpayer, you filed your tax return and it showed you owe X dollars of taxes. But there was a mistake in your return and we fixed it. Now you owe X plus." That's a correction notice. And millions of those go out every year, Lee, and those things are wrong 50 to 60% of the time.
Amazing. Dan, you wanted me to ask you the question about bank reporting.
Yeah, Lee, what's going on with this bill that's moving through Congress right now? The Nancy Pelosi, Chuck Schumer tax increase, 3.5. Well, it's actually about 2.1 or 2.2 trillion dollar tax increase over 10 years, and the $3.5 trillion 2023 operating budget or 2022 operating budget for the federal government is moving through Congress right now. And part of that is an information reporting regime that will require every bank in America, listen to this now, every bank in America to report an information return to the IRS if there's an in and out transaction in that account over the course of a year of more than $600. So in other words, if any bank account has in or out transactions that exceed $600, the bank is required to report to the IRS all of the transactions. Lee, can you imagine what that is going to do to the information reporting, sheer numbers of information reporting that's going to be piled onto the Internal Revenue Service? I already told you there's 3.5 billion information returns filed every year, W-2s, 1099s. If the banks are required to make these reports, Lee, we're talking about billions more information returns filed with the IRS. And now you got to wonder, how are they going to assimilate this information? How are they going to use this data? Well, the IRS has been contracting with major data processing companies over the last couple of years to build highly sophisticated computer programs and database analytical programs to sort through this data and identify the type of information that the IRS specifically is looking for. And as a matter of fact, I've written about this, Lee, and my articles on this have been published in national magazines about this particular issue. So they're on top of this, and they're determined to be able to get real-time access to every public and private database in America that has anything to do with financial reporting. And they're working steadily to do it.
Dan, I want you to tell us how to get your Dan Pilla Small Business Tax Guide for $49, because wow, that's a really nice price considering, the wealth of knowledge you put into your books are amazing.
Well, thank you, Lee.
Hands-on practical experience for small business owners. They really need it.
Yeah, every business owner in America needs to have this book, Lee, especially now with the IRS ramping up for the systematic attack against them. And the way to get the book, you can go to my website or you can call my phone number. The website is taxhelponline.com. That's all one word, no spaces of any kind, taxhelponline.com. And right on the homepage, you'll see links for books and resources, and it'll take you to my book page. The other way to get the book is to call my phone number, 1-800-34-NO-TAX, 800-34-NOTAX, and anybody that answers the phone can help you order the book, Dan Pilla's Small Business Tax Guide.
Good, Dan. That's great. So let me ask you this question. The attacks on the rich we're talking about, I just wanted you to give us a couple thoughts on that before we close out.
Yeah, well, my first thought is it's BS. The left is using
what, my question or the attacks on the rich by the IRS? I just thought I would ask. It'll come as no surprise to you, Lee, that is just a complete ruse. We're going to attack the richest 1% of Americans, and we're going to make them pay their fair share. Well, the fact of the matter is the top 5% of income earners in America pay about 55% of all the taxes that are paid. So the rich are already paying just about all of the taxes, no question about it. The bottom 90% of income earners, well, let's just say the bottom 50% of income earners don't pay anything in income taxes at all. They actually get money back from the Internal Revenue Service in the form of these credits. The child tax credit and the earned income tax credit are the two primarily that give money back to the bottom 50% of income earners. The fact of the matter is, Lee, there's not enough money in the top 1% to make a difference when it comes to these deficits that the federal government has been running year after year after year and is projecting into the future. We're talking about $500 billion deficits up to $1 trillion deficits that these people are talking about. You'd have to confiscate the wealth, not just tax the income, Lee, confiscate the wealth of the richest 1% in order to make up that difference. And you and I both know that's not going to happen. The money is in the middle class. The money is with small businesses. That's where the IRS attack is going to be. And the proof of that, as I argued earlier, is that the IRS believes that 50% of the tax gap is attributable to small business owners. Half the underpaid taxes, not coming from the richest 1%, coming from small business owners, according to their beliefs and their philosophy. That's why they're attacking small businesses, but it becomes politically palatable and it becomes acceptable by the masses if the masses think that the richest 1% is the target, not them. Yeah. Well, let me ask you this question. Do you think that the IRS is going to become more effective, or do you think that under all this new reporting, they're going to be as dysfunctional as they are now?
Well, they seem to be getting more dysfunctional every day. Part of that problem, in all fairness, is starting in May of last year. The IRS virtually shut down and all their employees went home. Most of their employees went home, and they're still not all back at work yet. So there still is a tremendous logistical problem with the COVID issue.
Is now a good time to settle IRS debts?
Oh yeah, there's no doubt about that.
Because, I was going to tell people, a lot of people don't know this, but, there's a lot of big firms that advertise on television all about their IRS services and the negotiator. And really, you're the granddad of all that. And a lot of people don't know that. And
that's true. I created.
You essentially created an industry there.
Yeah, that's exactly right, Lee.
Are they anywhere near as good as you? I don't think they
don't
are.
Have the experience, Lee. I mean, first of all, you got it depends on who you're talking about.
But you're saying you didn't memorize the tax code.
Nobody's got the amount of experience that I have dealing with this stuff. And as you said, I created the industry. The industry did not exist until my book, How to Get Tax Amnesty, was released in 1992. I'm the one that started this whole thing. So in terms of experience, there's nobody out there that's got more experience.
Well, that's what the Associated Press says about you. They say that about you. And I know that about you because just a little personal note I would like to add for people. The way I met Dan a long time ago, this tells you how old Dan really is. We had this thing called the Y2K, and everybody thought the Y2K, they were throwing out their tax returns. They thought the IRS computers were going to melt down. And there was this religious, fervent belief that Y2K was going to shut down and the IRS was going to go away. And Dan was out there and he was saying, no, the IRS computers will not melt away on January the 1st, 2000. And, when you first did all that, it was very controversial because everybody was absolutely certain that and I actually went out with a story. I didn't know you that well, but I read your stuff and I said, oh my God, I'm going with this. And I'm glad I did. I was like, I got a lot of people were very angry at me when about a year and a half before the Y2K was supposed to happen. But you were vindicated, on midnight, January 1, 2000. So Eastern Standard Time, my time, of course. So yeah, I just wanted you to know that's how I met Dan. That's how I met Dan.
Mentioned that, Lee. It's funny that you mentioned that. I'm telling you, until you got behind me, I was the only guy in America that was saying that the IRS is not going to melt down. It's not going to go away.
Didn't I noticed, I was like, when I read your analysis, I said, uh-oh. I said, I'm going with it. I told my readers, and to this day, I tell people, now most people don't even remember Y2K, but I mean, that was a very big deal for you to stand up and say, no. The IRS is not going away. Don't throw your tax returns away.
I'll tell you something else, Lee. I had internal fights with my editor at the time, my business partner, because he was reading all that other stuff that was out there too.
It was very convincing, Dan.
And I'm telling you, Lee, it was very convincing, no question about it. And I had the data that I had, and I had a lot of fights internally.
You were more convincing than the other arguments, but the other arguments were strong. They had a lot of technical support. And anyway, I just wanted to mention that because that's how I originally met you. That's how I met you. And then I think I had recommended your publication and a bunch of people subscribed. And then you sent me some check to thank me out of the blue. And who the hell is this? Where did I get this check? And that was very cool. So we go back a ways. And,
a long time.
And anyway, Dan, I'm very grateful to you. I'm grateful to know you and I'm honored. And also, I want to just please repeat for the Dan Pilla Small Tax Guide. It is absolutely must reading. Give me your phone number and the proper website address again, please.
Yeah, the phone number is 1-800-34-NO-TAX. That's 800-34-NOTAX. The website, taxhelponline.com, all one word, taxhelponline.com. And the book is Dan Pilla's Small Business Tax Guide.
Dan Pilla, I want to thank you for your time today. You're a great American, and I'm extremely privileged to know you and grateful to have this chance yet again to talk to you. So,
well, I appreciate it, Lee. Believe me, the pleasure's all mine. Thank you.
Thank you, Dan.